Welcome to LJ Daily Housing Market Update, and let's get started with our interest rates. So, the interest rates as of January 30th, 2024, according to Mortgage News Daily, they were hovering around 6.87 for your 30-year fixed conventional loans compared to 6.16 for your 30-year FHA. Okay, these are your national averages. This is your top tier scenario. And next, let's talk about your Freddie Mac. Their national averages, they do this on weekly basis, and they're hovering around 6.69 versus your 15-year for 5.96. Okay, a little bit down the video, I'm going to show you even if you go with 30-year mortgage, you can pay a little bit extra payments and still reduce those time. So there'll be an early payoff. When we are showing these interest rates, just know that these interest rates have many different factors. This may include your credit scores, your home location, your down payment, your loan term, your loan type, your residency, and how many units you're buying. So when you look at these headlines, don't assume that you can get this, or you might be able to get it even better depending on your situation. Okay? Your buying power is definitely increasing even when these interest rates are dropping little by little. We have seen this, month over month now. So let's say if person who's trying to get a mortgage, a loan amount for $650,000 at 6.87%, their mortgage payment, principal and interest will be 4267, and they can afford up to $650,000 loan. Versus if everything else is the same, but the interest rates were higher at 7.62 in this scenario here, that person can only qualify for 603. So $603,000 loan for 7.62 versus $650,000 loan for 6.87. Big difference. So the point of this slide is to show you guys, if you received a pre-approval in past couple of months or 6 months, you definitely want to go back to your loan officer and see what you qualify with today's interest rates. We're going to show you two different scenarios for affordability. First one is a household income of $60,000, down payment $40,000. This person has no debt. They took care of all their debt, so there's no debt, and their interest rates 6.87. Today's averages $5,000 property taxes and $1,500 your property insurance. This family can qualify up to $300,000 for the property. Their mortgage will be 2250 based on these numbers here. Okay, this is on 45% DTI, debt to income ratio. So this is your first scenario. Your second scenario is that this household income is $125,000. Their down payment is $80,000. Their monthly debt is around $250. These are their minimum payments that they have to make on their credit cards or any revolving debt. Everything else is the same as first scenario. This family can purchase up to $673,000 property. Their mortgage payment will be around $4437. So you want to review, how much you can qualify for, you can get in touch with us and we can run your numbers. Let's talk about your early payoffs. We mentioned this earlier. You don't have to go with 15-year mortgages. You can go with 30 years. Obviously, if you can afford it, you have no problem paying that 15-year. Great. Big ups to you. Otherwise, you can still start off at 30 years and start making extra payments whenever you can afford it. So in this example, we're showing you if someone is making $200 extra on their mortgage payment, these numbers are coming up from the last scenario that we used here, this one here. If this family decides to make, instead of making their monthly mortgage payment of $4,400, they start making it $4,600. That will have a big effect on their mortgage in a positive way. One is that they're going to save a lot of years. Just by making $200 extra payments, they're going to save 4 years. So automatically that 30-year mortgage becomes 26-year mortgage. Obviously, if they increase this $200, it's going to have even a bigger effect on this. And how about the interest that they're going to save? $128,000 in this 4 year time frame. So big difference, especially when you're starting off your mortgage. This is where it will have a bigger impact because in the beginning stages, your majority of your mortgage payment is going towards your interest and all the other stuff and not the principal. So these extra payments towards your principal will make a big effect, positive effect in your mortgage. Okay. Next, guys, in the news, we're all about the Fed because the Fed meeting is tomorrow. Inflation has slowed. Now the Fed Reserve faces expectations for rate cuts. When will they do it? Will they do it tomorrow? We highly doubt it. But you guys want to keep an eye on it. We'll be doing it, video tomorrow too. So we'll keep you guys posted. Okay, the current inflation is at 3.35, and the odds of Fed cuts for tomorrow are very slim for January 31st, but hopefully they will do it on the next meeting, which is on March 20th. Okay, your prices overall has been home prices overall has been gone up over the years. If you feel like they're going to come down, you want to think twice. Why is that? Because the interest rates are coming down. If the interest rates are coming down, there'll be more buyers for the same property that you're putting in a bid for. There will be a bidding war. So the prices might not come down as much as you would like. Otherwise, it might just go higher. Okay. Next, guys, we're going to talk about HELOC. This is for people who already own a house, but they simply don't want to sell it. They don't want to sell it. Why? Because they're locked in at such a low interest rate during COVID time. Around COVID time, they refinance their mortgage, and maybe they're locked in at 4%, 3.5%, 3%, 2.99. Those people simply don't want to sell and simply don't want to get rid of that mortgage because it's such a good deal for them. For them, we have a loan program called HELOC. This is going to be your home equity line of credit. Think of like a credit card. So let's say your house has equity. This is your profit, but you can't touch it until you sell that property or if you refinance. The second option you're going to have is to get another mortgage, your second mortgage. This is going to be your HELOC. So the specs for that is that you need your credit scores to be above 680. If your credit scores are above 680, you might qualify. Okay, your down payment, you don't need any down payment for this program. Your debt to income ratio, 49%. Your closing cost for this HELOC, between 3 to 5%. Your key points for this is that it is an ARM loan. It's going to be adjustable rate mortgage. So the interest rates will change for this HELOC on regular basis. Every month there might be a different payment amount. Your current mortgage does not get affected in any way. But the bank, the lender that you're going to get the HELOC from, they want to make sure that there's no late payments on your first mortgage. Okay? So whatever your first mortgage is, the second mortgage you're about to get, combined loan to value, you can go up to 90%. Okay. So first, because we told you it's like a credit card, so let's talk about the terms. Usually the lenders will give you 3, 5, or 10 years. It's called a draw period, where let's say you have a limit of $100,000 or you want to take out $100,000 from your current property. So you would have that limit. You can draw on your closing, or you would have the first 3, 5, 10 years that you're going to draw money from. First those 3, 5, 10 years, you're going to make interest only payments. So whatever you're taking out, you're going to make an interest only payment on that. Once that draw period is over, then you have your repayment period. This period is going to be between 10 to 20 years, and you're going to repay that mortgage. Okay. Next we have is going to be your primary residence loan amount. You can take up to $500,000, or if it's for investment, you can take up to $350,000. Okay, let's talk about some new listings on the market here. The first one is in Hempstead, New York, for $510,000, 4 bedrooms, 2 baths. The next one is in Hicksville. This is listed for $747,000, 4 bedrooms, 2 baths. Okay. Another one is in New Hyde Park here, and it's listed for $798,000, 4 bedrooms, 2.5 bathrooms. And the last one is for $949,000, 4 bedrooms, 2 baths in Levittown, New York. Okay. So if you're looking for any properties in Queens, New York, you need any help viewing those properties, we have over 70 agents I'm the broker here. We can help you guys out with anything that you guys need for in Queens or in Long Island. Every day we want to teach you one term to learn. One term to learn for real estate is going to be escrow account. So an escrow account is an account which escrow money is held. So what is that money held for? Why would a bank want you to make a mortgage payment? From that portion of that mortgage payment, they're putting some money towards your escrow. They're holding this money for two reasons. Number one is your property taxes, and number two is insurance. Banks are well aware, hey, every year when the property taxes come up, and usually they're $5,000, $10,000, $15,000, depending on which area you live in, they know that it's hard for you to come up with that money. So every time you're making that mortgage payment, they're holding some money towards your escrow account, and they're holding that for these purposes: tax and your insurance. Okay? So think of it as your savings account, but they're managing it, your lender is managing it to make sure that you have enough funds when this time comes. Okay? Next, guys, this slide shows you a 5, 10, and 15-year appreciation in Queens here. So you guys can see that, hey, the rates for the home prices always has gone up, for the last 60 years. What makes you think that the home price is going to drop all of a suddenly? Okay, when we're telling you we have this inventory issue. Similar things are going on in Long Island as well. 5 years, 10 years, up to 63 years. Okay. Who's involved in a real estate transaction, guys? Every day we want to pick out a different person that's going to help you out in a real estate transaction. Today we want to talk about your buyer's attorney. If you're a buyer, you're going to have an attorney that's going to represent you. Number one is make sure that attorney is charging you normal fees. That's not charging you per hour or anything like that. Typically in Queens or Long Island, for a single family house on a contract, buyers attorneys are charging on average about $1,500. Some of them are a little bit more, some of them are less, but 1,500 is the average that we see. So if anyone is charging you more, question that. Second is that protect yourself from contingencies. These are conditions that you want to add in the contract. So your attorney should be able to review these. You want to make sure your bank appraisal contingency and your home inspection contingency is in the contract. So this way you will be protected. If you're just thinking about buying a house, you want to budget yourself. That's your number one step. You want to focus on your income. You want to save up much as possible. You want to reduce your debt much as possible, and you want to increase your credit scores much as possible. Okay. For your savings, you need down payment and closing cost. 3 to 20% down payment, depending on which loan you want to go with. The lowest you can go is around 3%, and closing costs 3 to 5%. So you, at bare minimum, you need at least 6%. So if you have 6%, you can get the ball rolling. For your credit scores, you want to improve them much as possible. Make sure the co-signer that's going to be signing with you, they also have good credit just like yourself. So the first target should be 580 for FHA, then 620 for conventional, or if you're going to go with no income check, you need even higher, 690 or more. We hear this all the time. Hey, the wife, I have 800 credit scores. Husband, I have 500. We will have a problem when that time comes. So make sure both of you guys are working towards improving your credit scores much as possible. We just showed you the interest rates for today. 6.87 was your national average. So if someone is telling you I can give you 5%, you got to question that. How come you're offering me 5%? Right? Is there any, hidden fees? Is there any, what's the APR? Or am I going to buy down the rate? If I'm going to buy down the rate, I need to know how much it's going to cost me and what is my savings per month. So in this case here, if it's going to cost me $4,000, but my savings $82, it's going to take me 4 years to get this money back. Okay, so maybe it's a good deal, maybe it's not, you decide. But just know the fact what's your national averages and what your loan officer is actually offering you. Okay, guys, we have 16 loan officers here at LJ Mortgage Team. We can help you out with FHA, conventional, QM, non-QM loans. We have all the options. We're the brokers here. So we are licensed in 6 states: New York, New Jersey, Georgia, Florida, Michigan. So, if you guys have any questions regarding those, you guys can reach out to us. If you are a real estate agent watching this, Guys, we at LJ Realty team, I'm the broker here. We have 70 plus agents. We don't charge any office fees, no desk fees. We give you up to 100% commission. We have different levels. We give you all the tools for free. Please reach out to us so we can show you guys what we have to offer. Okay, that will do it from my end. Thank you so much for joining. I will see you guys next time.